Here's something nobody talks about honestly. The market is not always tradable. Some weeks are amazing. Trends are clean, setups are obvious, everything just works. And some weeks are absolutely brutal. Fake breakouts everywhere. Price chops in a range for hours. Every entry you take just looks wrong 10 minutes later. And here's what separates the traders who make it through those weeks from the ones who blow accounts. They do not change anything. They stick to the same exact process. Same setups, same rules, same size, same everything. That sounds boring, and it is. That is kind of the point. Today I want to talk about the systems I lean on when the market is doing everything wrong, because this is where most traders get absolutely destroyed. Not in the good weeks, but in the bad ones. Let me start with something that took me a long time to accept. The market is not broken when it is chopping. You feel like it is. You feel like something is wrong. Every trade gets stopped out by a week. Every breakout fails. Every time you think you see a setup, it just reverses on you. It feels personal, like the market is specifically trying to beat you up, and it is not. The market is just doing what markets do sometimes. Choppy conditions are part of trading. They always have been. They always will be. The problem is not the market. The problem is what most traders do in those conditions. They start changing things, they lower their risk, and they raise it again. They switch instruments, they try new setups, they widen their stops, they watch lower time frames, they take trades they would never normally take. And every single one of those changes makes things worse, because now you are not just dealing with a bad market, you are dealing with a bad market plus a trader who has just lost his trading edge. So here's what I actually do when things are not working. Absolutely nothing. I do nothing different. Same setups, same size, same daily loss limit, same 2 loss stop rule, same everything. And this is the hardest thing in the world, because when you are getting chopped up, you feel like you should be doing something, right? You feel like if you just tweak one small thing, it will finally click again. That feeling is just a trap. It is your brain trying to feel in control when you are not. What I have learned is that my edge does not exist on any single trade. My edge exists across tens and hundreds of trades taken the same exact way. If I start changing things trade by trade, I do not have an edge anymore. I'm just gambling with some extra steps. The guys who get destroyed in bad weeks are the ones who think that every loss is a signal that something needs to change. The guys who make it through are the ones who know that a week of losses is just a week of losses. It is not a signal to change. It is just what the market was doing that week. Now, I'm not saying do nothing when things go wrong. There are specific things that you should do. They just are not what most people think. The first thing is journal every trade exactly the same way. Win or loss, it doesn't matter. Choppy week or clean week. I write down the setup, the reason, the exit, and how I felt about the trade. This does 2 things. It stops me from telling myself stories about what happened. And when I look back at a losing week, I can see clearly whether I actually broke my rules or whether the market just was not giving me the setups. Most of the time when I go back and look, I did not break my rules. The setups were just not there, or the ones that were there did not work. Simple. That is completely different from me doing something stupid. Knowing which one it is, that is the difference between adjusting your trading strategy and breaking it. The second thing, and this is important, review your trades after hours and not during. I used to do this wrong, right? I would take a losing trade and immediately go back and look at what I did wrong. I would find maybe some tiny thing, maybe I could have waited, one more candle, maybe the entry was slightly off, and I would use that as an excuse to take the next trade with different rules. And that is not reviewing. That is rationalizing. Real review happens when the session is over. Charts are closed, tomorrow's plan is already in your head. That is when you can actually see what happened without the emotion of the moment. During the session, your only job is to execute the plan you made before the market opened. That is it. Analysis of what is working or not working happens later. The third thing is recognizing when the market is just not your market. I trade, for example, NQ futures most of the times. When NQ is in a trending clean environment, I can make some really good money. When NQ is chopping sideways in a tight range for 3 days straight, there is not much for me to do. And here's what I used to do wrong. I would force trades. I would stretch setups that were not quite there. I would lower my standards because I wanted to be active. And here's what I do now. I sit on my hands. If the environment is not favorable, there are no bad trades I did not take. There are only bad trades I took when I should not have. The opportunity cost of sitting out is 0. The cost of forcing trades in a bad environment is your trading account. And sometimes the most profitable thing you can do is just not trade at all. The last thing, and this one took me the longest to accept, your bad weeks are not actually that important. I know that may sound wrong. When you are in a bad week, it feels like the most important thing in the world. You are watching the account account go down, you are frustrated, you are thinking about how you are going to recover it. But if you zoom out, a bad week is just 1 week out of 52 weeks. If you have a solid trading strategy and plan and you stick to it, the bad weeks average out against the good weeks. That is how edge works over time. The mistake is letting one single bad week change how you trade in the next week, because now you carry the frustration, the doubt, the desperation, all of that into weeks that should have been completely normal. Consistent traders treat every week as an isolated week. Last week was what it was. This week is separate, and next week will be separate from this week. That detachment is what allows the edge to actually play out. Now here's what I want to leave you with. Staying consistent is not about motivation. It is not about discipline in the way most people mean it. Discipline just sounds like willpower. This is not willpower. This is about building a process that is the same regardless of what the market is doing, regardless of whether last week was good or bad. The process is the only thing you control. The market is not in your control. Your P&L is not in your control. How you feel in the moment is barely in your control. Your trading strategy and trading process is the only variable you own. Protect it, keep it the same, whether the market is trending or chopping or doing something you have never seen before. That is how I got over $2 million in payouts with prop firms. Not by being brilliant, not by having a perfect strategy, by doing the same boring thing over and over again and letting the numbers work out over time. Boring is what wins in trading. The sooner you accept that, the faster it all clicks together. If you want help building a process you can actually stick to when things get hard, I have a mentorship program called the Prop Firm Blueprint. Link is in the description if you want to apply to that. And if you need the prop firm that actually pays out, I recommend Hola Prime. They have the fastest payouts in the industry. You can use code NFX or the link in the description for the best discount available. See you guys in the next video.